Welcome to our weekly Forex forecast. My name is Jay Norris. I'm a trading instructor at Trading University, and we need to remind you that trading Forex is a risky endeavor and not suitable for all investors. First market we're looking at will be the Australian US dollar. There's the Australian US dollar. You can see that resistance we've had in place now for a month or so continues to hold, and we think long term you may continue to see both sides of the market, meaning as a shorter term trader you could trade both sides, long and short, that overall we feel that what's happening right now is this current intermediate term pattern is still down. We think that'll remain the case, and probably even more important, your primary pattern here, longer term, you could see is still down also. So longer term traders, more towards investors, would want to continue to sell rallies in the Aussie dollar. Next market would be the dollar Swiss. Dollar Swiss, you continue to see pretty good weakness in this market. You know, if it's going to turn it around, they've got to do it soon. You're sitting right on top of pretty good support there. You know, wouldn't this make a nice head and shoulder bottom here potentially? We're bullish at these levels, which is the same thing as saying we're not so bearish despite the long-term trend. We think that you have value down there. There you can see a potential head and shoulders on the weekly chart. So we like that level 89 even in there. And, you know, it's one of those markets where, you know, historically, you look back the last couple of years, that's cheap. So we wouldn't be all that bearish if it closed below resistance or support. Generally, a market closes below support. We're going to switch, you know, to the short side. That's not the case here at these levels in dollar Swiss. From a day trader's perspective, very short term, you've really been in a position where you're trading both sides, meaning you're taking both buy signals and sell signals intraday in this market for the past week or so. Similar in the euro. Here's the daily chart I want to show you. So we're looking for potential long-term support in this area. You can see here's the potential left shoulder head and then a right shoulder. So we'll see what's going to happen. If this market's going to strengthen, it has to do it soon. You're probably going to have to start seeing better U.S. numbers. The last 2 months, the U.S. economic numbers, which had been much better relative to the rest of the globe and on an improving basis long term, they've softened up. So we're definitely in a data-driven market. You have to continue to keep an eye on these economic numbers and the developments there in the U.S. economy. If that's the case, you start to see improving numbers, then you can make a good case for support here. But right now, short-term, you're trading this market from both sides. Historically, though, we still think you have to favor the long side, still favor buying dips. Next market will be the dollar index, and you're going to be looking at the same thing here, nearly identical support. And there you go. Longer term, you still see a pattern of higher lows, higher lows. I mean, you took out that low, but that's just more shorter term. So going back to October, you still have that pattern of higher lows, but the market's flattened out here too. So, you know, same story, same fundamentals, really nearly identical market the dollar index itself to the dollar Swiss. So it's really the same story here. You're going to have to see improvement in the U.S. numbers compared to what we've seen in the last month for this market to bottom out long term. But, you know, when you take a historic look at this market, and we've done this before, here, look at a monthly chart, and it's easier to make a case for this market starting to bottom out here. So, you know, as I said last week, we like it above 80. We love it in the 79 handle, and I think that's how you have to view it historically. Short-term trader, you'd certainly be trading both sides right now as far as long and short. Speaking of long and short, same story here in the euro. Here's your euro. Well, that's your monthly. Let's drop down to a daily chart. And you can see a little bit of indecision Friday. This market held up pretty good overall, given the fundamental events out there. You're still benefiting from money flows into global stock indices into global stock markets in the euro. You know, a lot of big money thinks, well, they may be overweighted in the U.S. because the U.S. has performed so well. Basically, the U.S. stock market, the strong performance there the money tends to pile up in those U.S. accounts. So just as a matter of prudence, a lot of money managers will take that money and start to diversify it. And you can make a case for the world having kind of been undershort some of those European companies, and those dollar flows will definitely favor the euro. And we think that's what's been supporting the euro. Long term, though, You take a look at the weekly chart here. We're still longer-term bears. We think that you'll do well to be setting up for the euro to be going the other way long-term, but you can't rule out a move on 140. And we actually talked about that back in 2013. 140 was a longer-term target for us for a while. And essentially, we shifted gears here, joined the bear camp based on the possibility of this being a double top. You wouldn't want to miss the move. You wouldn't want to have it coming that close to 140 and then miss it if it doesn't get there. So, the door is still open to 140. Again, here's a similar technical formation where you could have a head and shoulders here. Here's the left shoulder, here's the head, and then you're looking for the right shoulder to be sewn in there. Or it could just run to 140. But we see that 140 is a possibility. From a longer-term trader's perspective, an investor's perspective, we think that long-term the exposure would be being long euro. But from a short-term trader's perspective, going down to a 4-hour chart, you can definitely be looking to trade this market from both sides. And really, that's how we've been approaching it for the last week or so, trading that market from both sides intraday. Next market we'll take a look at will be the dollar yen, and we'll finish up there. You were rewarded for buying dips in dollar yen. You've been rewarded for buying dips in dollar yen. We don't see that ending anytime soon. The dollar yen really a victim of U.S. stock market weakness overall. We liked it at 101, and I think if it gets there 101, you gotta step out and buy it again. If you get a double bottom there, I think longer term that'd be a pretty good deal, and you could ride that up to 106, perhaps even higher. So we like buying dips in dollar yen. Thank you so much. Again, my name is Jay Norris. I teach trading at Trading University. Good to see everybody. Thank you so much, and we'll see you next week.